Dated futures are used by traders to lock in profits, hedge exposure to an asset, create low-risk yield trades, or to aggressively speculate on the price of an asset using leverage. Let's get into it. Hi, I'm Jack. I'm a product manager here at EQONEX, and I'm going to talk to you today about dated futures. A dated futures contract is an agreement to buy an asset at a specific price at some date in the future. Well, not that far into the future. It usually means the end of next quarter, or sometimes a little bit further. This is great news if Bitcoin price rises between now and then, because you still have a contract to trade at the original price. But it could be costly if Bitcoin price falls between now and then, because you're still obliged to trade at the higher pre-arranged price. Dated futures are used by traders to lock in profits, hedge exposure to Bitcoin, structure low-risk yield trades, or to aggressively speculate on the price of Bitcoin using leverage. And our contracts are physically delivered. So, after settlement, you'll still be holding Bitcoin. This is great news for basis traders, hedgers, or anybody else who wants to keep their Bitcoin exposure open after the contract settles. Because of settlement at expiry, we expect futures prices to get closer and closer to spot prices as settlement approaches. And as we're not trading now but in the future, you don't need to have all of the cash available for the transaction until the settlement date. This means that we can trade these contracts with leverage, and the price tends to get driven up as speculators come in and buy them. We call this contango. No, contango. This means that the further away the expiry date of a contract, the higher the price of that contract. It also allows for a very low risk yield trade or basis trade, where you buy the spot, short the future, and can lock in a profit if held to expiry. Sweet. You can trade dated futures in your main account or any sub-account at EQONEX, but first you'll need to enable cross-collateral and negative balances for that account. To enable negative balances and cross-collateral for an account, first go to the Management panel. Find the sub-account that you want to enable and click on the Manage button. Inside, you'll find two options for cross-collateral and negative balances. Turn on cross-collateral first, read the terms and conditions, and then click Confirm. After that, enable negative balances as well. Once you're finished, don't forget to click Done, and those will be saved. After this, you can trade dated futures with leverage of 125 times. Awesome, right? That is awesome, right? Yeah, that's awesome. EQONEX dated futures are physically delivered. This means you'll need to have enough cash in your account to buy Bitcoin if you're long, or Bitcoin to deliver if you're short, or else risk liquidation. The advantage of this is that the dated futures contract will automatically close out any offsetting spot position. This is great news for basis traders in particular, whose basis trade will be automatically closed out at expiry without any slippage or execution risk. Because of the physical settlement, we've introduced the concept of delivery margin to make sure that you have enough assets in your account at the expiry of the contract to make the settlement. Your margin requirement will increase by 3% a day for each of the 7 days before the end of the contract. This means that if you're trading these contracts with large leverage as expiry approaches, you will need to reduce your position size or post additional margin to reduce your leverage, or roll your futures position to a later expiry, or else you'll risk liquidation. Please keep your eyes open for communication from us, as we'll be sending out many additional automated notifications if you're trading these contracts to remind you about the measures that you need to take. For more information and videos, check out equonex.com. Happy trading!